The stock market is reaching new all-time highs, the S&P 500, Nasdaq, AI companies going crazy, and this is the time for the AI bears to accept defeat. Because in this video, I'm going to show you that actually the AI bull run is more than justified according to earnings, according to revenue, according to what the leaders in the industry say. And I hope you have already some exposure to the AI bull run. If you don't have, in this video I'm also going to tell you how to get some exposure to these stocks, either directly investing in some of the stocks or by adding some ETFs that will give you exposure. Okay, but without further ado, let's get straight into it. Okay, to start, Paul Tudor Jones, who is an OG in the world of investing, and he's like 71 years old, if I'm not wrong. He just recently added AI stocks to his portfolio. And according to the video interview where he talks about, the CNBC interview where he talks about it, he said that he's not adding individual stocks, he's adding the entire sector. So probably he's investing in something similar like XLK, which is an ETF that gives you exposure to tech, especially these top AI stocks. Nvidia, Google, Amazon, Tesla, and so on. But if you still don't believe that there is a very high demand to this, ask yourself. People compare the AI bull run with the .com. Now I see charts comparing the current bull run everywhere, comparing it to the .com crash. But let me ask you a question. Back in the during the .com bull run, you were using websites and buying stuff online? I was not using it, okay? I was barely using any internet, and only many years later I put my credit card to buy stuff online. But nowadays, I'm spending like $200 per month in AI, okay? Yeah, so there is real revenue coming to these companies, and the numbers are showing you, and I will show you later in this video. But let's hear what Dario Amodei, the Anthropic founder, which is like Claude AI, say about the demand that he has been having.
We tried to plan very well for a world of 10x growth per year. In the first quarter of this year, we saw, if you were to annualize it, 80x growth per year in revenue and usage, and so that is the reason we have had difficulties with compute. Right, we've planned for anything from it only grows a little to it grows 10x, and yet we saw 80x.
So as you see, these companies, these big AI companies like Anthropic, are trying to source as much as possible computing power. So there is a very high demand for computing power, and that's why we see stocks such as AMD, Intel, Nvidia, ASML going up so much. It's entirely justified because the demand is so outrageous. Like you saw just now, Dario Amodei saying that he had an 80x growth in the first quarter of this year. It's absolutely mind-blowing. But even Larry Fink, the CEO of BlackRock, believes that we are very short on AI compute power and we need much more computing power. Let's listen to his video.
The United States is short power, we're short compute, we're short chips, and there are going to be shortages in all three. And memory, four things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
So, as you see, there is indeed lots of demand for AI computing power, but you might still be asking yourself, does it justify the stock market being at all-time highs? And that's where I want to show you this chart here. So let's take a look at this chart here. What I show you here is the revenue and the revenue estimates. And what we see is that all these big top tech companies, I hope you can zoom in a little bit here, all these top tech and AI companies, their actual revenue of the first quarter this year was higher in all the cases than the estimates. So analysts usually give an estimation of how much is going to be the revenue, and if we beat the estimates, if these companies beat the estimates, it means that the business is going really well. And this is what we have seen over the last few days because companies were reporting the Q1 revenue and earnings. And what we saw across the board is that all these companies are increasing even more their revenue, are increasing even more their margins, their earnings, and that's why we have the stock market going up. Stock market is going up because of strong earnings. Let me show you here some of the numbers. So Apple, for example, the estimate for revenue was $109 billion and they got 111. Google, it was 106, they got 110. Microsoft, 81, they got 82, almost 83. Amazon, 177, they got $181 billion. Tesla, 22, they got a bit over 22. Meta, 55, they got 56. Micron, Palantir, SanDisk, well, you get the picture, right? So these companies are going up because actually the revenue is going up and the income and the earnings, everything is going up. So is it a bubble? This is what you call a bubble? Well, I'll call a bubble, like for example, last year, where you had the quantum computing stocks with zero revenue going up like it was like just going up non-stop, and then they crash hard. And I was telling everyone that these stocks will crash hard because it was not sustained in revenue and earnings. So now, how can you get exposure to this? Okay, one of the ETFs that I've been sharing in my community in the Henrik Wealth Academy, check link in the description. I do trade alerts almost every week and we have a 80% success rate. But one of the ETFs that I've been talking about and we bought here at the bottom is XLK. XLK, is up 38%. That's absolutely crazy since March 30th. Which is absolutely amazing. But we don't buy only XLK, we also bought TECL. The TECL ETF, as you can see here, also during the same period is up significantly more. So this is an ETF that is a 3x leverage ETF, and during the same period is up 150%. Yes, 150%, you hear me well. And if you actually zoom out, and let's say you have invested many years ago, these kind of leverage ETFs provide absolutely amazing returns. So if you have invested just 10 years ago, TECL would give you almost a 5,000%, as you can see here on the chart. But if you don't know very well about leverage ETFs, don't go all in, please, because they are very volatile. And I explain everything on how to invest in these kind of ETFs in my community. I have a 4-hour course about leverage ETFs. Anyway, you look also at NASDAQ. This is one of the biggest like bull runs in terms of percentually over the last few years. So we can see that during the Iran conflict, NASDAQ, for example, declined by 12%. And I was telling everyone, please buy right at the bottom. And in the meantime, it recovered by 28%. And of course, I have a very high exposure to QLD. QLD is giving me like very juicy, very interesting returns, because since the bottom of the market here until now is up like 62%, 61%, which is absolutely amazing. But I hope that by now you understand why am I investing and I'm not selling. I might be decreasing a little bit my leverage, but I'm not selling. I want to have this exposure to AI and tech because it's real. These companies are really having real earnings, real revenue, their margins are improving, and the economy is just generally doing quite well. People have still talk about recession, but they have been talking about recession for years. You have these perma bears like Michael Burry or Benjamin Cohen, and if you just stay out of the market because people that say that might be a crash, well, even a broken clock is right twice a day. The best investment strategy that you can have is buy and hold. Time in the market beats timing the market. I keep telling you this again and again and again because these big bull runs, the big gains is in the buy and hold, ride the trend, baby. Okay, guys, If you enjoyed this video, you should check the link in the description to my community where I post every single day. My main goal is investor education. I want you to be able to retire as early as possible with like good strategies, strong strategies, not like day trading and random stuff. And give it a like and subscribe, and I'll see you soon. Bye.